Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, so we're still filling out that ascending triangle. We're basically just, it's like a rising wedge pattern. We're slowly putting in higher lows. We're putting in higher highs, but not by as much. So the slope on the bottom is stronger than the slope on the top. And typically what will happen is, when we get to the maturation of the pattern, somewhere in this range right here, in between the purple and the green line, we'll expect a break in one direction or the other. Now, statistically, would favor a break in the continuation of the dominant trend. So I would expect us to break to the downside, which that would come into like confluence with our support from our distribution from way back before we had our capitulation move. And then if we were alternatively going to get the break to the top and continue, basically retracing that dump that we got, I would expect us to get that bounce like up here as high as 8,600, and then that would actually like bump us in to the support line that we had basically going from our wicks in this little pattern that we had started forming right here. So that's my two targets. It's obviously a huge range right now. It could go in either direction. I am still in my short trade currently. Obviously, we're getting ready to close this situation out here. If you want to go ahead and it's the end of the weekly in about an hour and 20 minutes. But if you go in here on the 4 hour and check out this triangle basically that we've been filling out, this thing is like perfect. The only reason I don't count like the tip of that wick right there and everything is if you actually go into like a shorter, if you go into the shorter time frame here, you can see, I mean, this thing is like absolutely beautiful. We've been finding support steady on the bottom, resistance on top, descending. Typically this is going to break to the downside. This is a distribution pattern, obviously, and then based on like price action and everything, like it feels like big time distribution too, because you'll see we'll get like those pushes to the upside, and then we'll like steady float up, and then we'll get the massive dump back down. But then as soon as we go below like that certain level, immediately gets like pushed back up. Even when we got like that massive like dump earlier, it got completely bought back up into just a wick. So and then here we got, let's see, on our daily, getting ready to finish here, we're basically just like sold off from that like resistance point. We got a higher close and then basically couldn't like stay above it. So flip over here as well. Daily, we're getting dangerously close to flipping that over into basically like distribution area. Weekly, obviously, distribution's been taking place, and this one's the one that's getting ready to close right here. Let's switch over to this one really quick here. I want to go to this on the weekly and see. This is what kind of had me thinking. We had talked about this, basically getting that push back up to the top here and then coming back down and selling off and putting in like another one of these big wicks. We still have like an hour and 22 minutes left. I don't necessarily think we're just going to dump all of a sudden like $800. I'm not saying it's not possible, but closing on top of both the 200 moving averages is a good sign after that capitulation move, even if we did get denied by our short-term moving average. So that's a good sign. Overall it doesn't change anything, but at least the market's showing some support. But on the daily here, this is what has me thinking twice is we crossed the histogram back over the slope line. It's still red on the TJD TD MACD, but we're here at the jewel thief, and we're getting the bounce like continuation here, move to the upside. So that's saying both those are saying like potential for like continued move. And then also you'll notice the short and the second shortest moving average here are like crossing over. So when we close this today here, we'll basically have like the confirmed cross of those two, which is like a third entry signal. So that's basically like 3 entry signals on the daily from like some reliable indicators. Unfortunately, in this situation, I think this is a total like fake out. I really do. Normally, I trust my indicators, and I would say like, you could go as bold as to say like trust them blindly, but I really don't. I still use like my own discretion and everything. So while I will be paying attention to this and potentially like entering some long positions, I'm not prepared at this point in time to just blindly follow these three indicators on the daily, even though they do have like extremely good track record. But if it's true and we are going to get ready to change this trend around and flip back to the upside, I mean, the last time we did that, it lasts for basically January, the beginning of January until the end of February. So, you get like 2 months out of it. So, if we miss it by like a day or two right here and we have to buy in at like 7,300 or whatever, and then we get, 3 weeks or so, 6 weeks, 7 weeks of, continuation, that's great. I'm completely comfortable with that. Matter of fact, that sounds great to me. But if the opposite happens and it was in fact a fake out, we're in a much better position because we're essentially like just staying in positions we're already in, and then we can essentially like flip long again when the time is right, with confirmation rather than just going in right now. So I guess what it really comes down to is like this is a discretionary move on my part. Although the indicators are all giving you like continuation to the upside, in this position basically, I'm not interested in taking any fresh positions to the upside. I will, however, like have my short hedges in place still with the stop loss, so in the event that we do get like that burst to the upside, it takes out my shorts, and like uncovers my spot positions, and essentially I capture the majority of the move, even if I miss like the first 5 or 10% of the move, whatever it is. I can capture like the continuation move without having to just like FOMO in. And then that being said, also in the event that I am right and we do sell off here and this was just a fake out, basically all that happens is my shorts continue to gain me fiat dollar value, and then my spot positions, I maintain the same amount of cryptocurrency, and then at whatever time I decide to close my shorts or my trailing stop loss takes me out, I then have that fiat which I can then use to buy more Bitcoin with, or whatever situation may be at that point in time. But that's a basic strategy for somebody that wants to be like a hodler and is afraid that just all of a sudden Bitcoin's going to go to like 20,000 overnight. But in the situation that we're in, is following like trending moves and understands that right now like the play is to be out of the market or short in the market, based on like the long-term trend. So, and that's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So, but there you have it. We're getting ready for our weekly close to come in here. Nothing really has changed for me as far as everything's concerned. I do want to switch over here real quick to the S&P. I've got the futures up here, and just looking at the daily here, it basically looks like we could potentially get continuation. We sold off, came back down on the shorter time frames, and bounced some key fib levels. Based on the moving averages, though, it does look like we're basically getting rejected and getting ready to sell off. And if you go to like the longer term time frames, essentially we got like that massive wick rejection right here. We could potentially get a little more continuation up here, but what I would expect to happen is essentially like the rejection and then sell off. We're still selling off, but the strength of the sell-off is weakening. So if it flips back to red here again, we can expect like another big move to the downside. We're getting continuation on the Stokes slope. We're getting continuation on the TJD Fisher. So there's no reason at this point in time, like on the weekly chart, to think that anything is going to change. So let's check out the Dow as well. And then as far as the Dow, on the weekly, basically the exact same thing. We bounced off of that key support. Okay, we bounced the support at the 0.5 and the support, got the move directly back up to the 382. So we bounced directly from the 0 past the 236 to the 382, and the 382 corresponded perfectly with the channel that we had been moving in, and we had initially got like basically the slingshot move, like the throw over here. We stab up to a new high and then immediately sell back off, come back out of the channel, blow out of it, and then we're going to come back up and see if we can switch that, or see if that's going to flip over from support to resistance, which, based on the move back down immediately to the 236, we got a 2 fib level move up, and then one back down. So what I would expect at this point in time, you see I had the arrow drawn out there, was that move down here and then potentially 2 more levels up. So we could potentially get up as high as like the 2384 range, or even if we could break back into here and get back up to the 618, 25,268. Now it is possible right now that we just continue to sell off and go to lower prices, but I'm not necessarily convinced that that's what's going to happen. I think there's possibility that we did find support right here and we're going to bounce it to the upside. And again, I have these drawn more in like a bullish retracement pattern. It is possible that that was the entire bounce back up and then we immediately sell back off to either retest the low, put in a double bottom, or, like a higher low. But I'm not convinced that these markets are just ready to turn around or anything, especially as we continue to see the damage done by this virus to the world economy and everything. I just wouldn't quite get bullish on these markets yet. I think the best place to be right now is cash. And, also I got you here, I want to talk really quick about the superinflation I keep hearing everyone talk about. And this can be different based on like where you live at, but I'm in the United States. And the way superinflation works is, essentially like they print so much money that goods cost like a ridiculous amount of money. So instead of like, a gallon of milk costing $2 or a gallon of gas costing $2, all of a sudden it costs $20. So essentially like the currency is devalued. Now the likelihood of that happening in the US is like zero pretty much. I mean, anytime in the next like 5, 10, 20 years, like basically that has to happen over time and take forever, because the idea is when an economy crashes and it goes into like the immediate recession depression, you might see some initial like hyperinflation, as like basically like there's a lack of like the goods, supply chain disruption and everything. People want to get toilet paper, so all of a sudden toilet paper is like super expensive, or hand sanitizer or whatever. But that's going to go away over time, and then what ends up happening is the opposite. Like you get like deflation, basically, like goods start getting cheaper and cheaper because people need to like find like liquidity. Like essentially like they have to sell off like their machinery or like their like assets for their business or their property, extra cars or extra vacation homes or whatever. So as there's like not enough demand because there's not enough like money in the market, or like people looking to buy all these goods, because say like if a million people die off, there's a million less people like looking for a place to live or a car or whatever the situation is. Unfortunately, like that's part of the supply and demand. So in all reality, like over time, as everybody starts getting like super poor in like a recession or depression, the opposite's going to happen. Like people will be willing to part with their goods like super cheap just to have cash so they can like buy food or whatever it is they need, pay their electric bill, or whatever the situation is. So we're actually going to see the difference, like the opposite of what everybody's expecting right now. So what realistically happens in these situations is people run to things like gold and Bitcoin and everything, like thinking it's going to be a hedge against like the system crashing, but the system takes so long to crash that eventually it like quote unquote shakes out the weak hands. But in all reality, all it is it's just like, instead of a price capitulation, it's a time capitulation. Like when people always say that term, don't risk more than you're willing to lose, it's not literally because you think like your investment is going to zero. It's more like the idea that if you put this in and the investment goes against you for whatever reason, fundamentals, you were wrong about technicals, whatever it is, your stop loss didn't trigger, whatever the situation is, imagine you're just trapped in that position now and you got to wait a year or 2 years or 5 years or whatever. That's what like time capitulation is. Eventually, like you can't wait anymore and you just figure it's just not worth the cost of having that capital tied up in that asset. So essentially that's what like the time capitulation versus like the price capitulation. Price capitulation, obviously, like the price drops so low you lose confidence in that asset or whatever, and so you sell and say I'm just better off taking my losses and either buying lower or putting this money to work somewhere else. So but I just want to touch on that a little bit. Now this is not necessarily the case for every other country, but as long as the dollar is still like the world reserve currency and everything, like people will always want demand for the dollar. And again, I hear people talking about like people don't need the dollar, but yes, they actually do. Like the way it's set up right now, like let me explain this very basically in like a crypto sense, that's going to make sense to people. Is like, imagine the dollar pair in real life is like the Bitcoin pair in crypto. Okay, so the dollar is paired to everything. You can get rubles, you can get like every single thing. You know what I mean? You can get British pounds with it. You can get like yen. You can get whatever currency you want is paired to the dollar. But you can't necessarily get those little currencies or abstract currencies or less desirable currencies paired to each other. So what happens is you have to essentially middleman through the dollar to go into those currencies. So if you want to make that transaction, you can't just go one transaction into what you want to go into. You have to go from what you're in to the dollar and then from the dollar into that other currency. So then you have to make two transactions the same way that a Bitcoin pair works. Like you can't just go into XRP from Ethereum necessarily. I guess that's a bad example because you probably can on most things, but not everywhere. As we're a Bitcoin, you can go into anything from Bitcoin. You can go into cash, you can go into Tether, you can go into XRP, you can go into whatever you want. But you can't just go from Litecoin into Monero. So you have to go from Litecoin into Bitcoin and then Bitcoin into Monero. And that's why the world reserve currency, that's why the dollar, that's why the American currency is going to stay the strongest for the longest. Unless that fundamentally changes and the world stops wanting those dollars, we will not see hyperinflation, on a long-term time scale. We may see it on certain products. In the meantime, as we see like supply chain disruption and supply and demand like shifts on a crazy scale because all of a sudden things that people wanted like, by the millions of, people don't want anymore, like restaurant goods, and then people didn't want before, all of a sudden they do, like healthy food, because people just wanted like Cheetos and Pop Tarts before, and now all of a sudden they want like water and chicken and rice because all of a sudden they're worried about their health. I'm not even gonna get into all that, but essentially like all of a sudden we see this crazy like supply chain and this shift all of a sudden in supply and demand, and that's going to change like the markets and everything, like shifts into like Netflix and all that stuff. So it's important that you kind of see how all these things are going to happen and understand ahead of time. So if you're thinking like I'm going to rush out into all these safe haven assets like right away, I'm not saying Bitcoin can't just like pop up all of a sudden and go to 10 grand. Like of course it can. Like we all know Bitcoin, it can do whatever it wants. It can go to 1,000 and then to 10 grand in the same hourly candle if it wants to. But the fact of the matter is, if you really think that we're going to see a capitulation event and still sell-offs in like traditional markets, and you think that traditional markets lead Bitcoin or correlated, which they obviously are because of like futures and like Bitcoin liquid index and like all those things, essentially what you're seeing is those things are going to be correlated, like the Bitcoin futures and Bitcoin exchange prices, on like the CME and all that stuff. So essentially what that means is that if there's going to be like a massive pump into money and all of a sudden all these stocks are going to pump and we're going to see like $40,000 like S&P, like, and Bitcoin's going to go to like 30 grand, why wouldn't it be just as likely that they would short the market? Like it makes more sense to me that you would short the market. If you were really thinking like, okay, I'm getting ready to put $1 trillion into Bitcoin, like let's go, or 10 billion or 100 billion or whatever it is, 1 billion, it would make way more sense to short the market, dump it down, and then buy up spot asset at a way cheaper price. So I think it's way more likely that we would see like a leveraged massive capitulation sell-off, from Wall Street and the big money guys, capitulation, crash like the price, and then pick up the spot at like pennies on the dollar, and then all of a sudden flip to like a leveraged long position, and then all of a sudden like Bitcoin is like the hedge against like the system. That's what I picture it as. And again, that's just me, speculating completely. I may be completely wrong. Maybe it just goes to like $1 trillion tomorrow, and everybody that had $100 in Bitcoin is a millionaire, and I'll live happily ever after. But using technical analysis and reason and experience, and I've been through these situations before. I've experienced recessions as an adult, and I understand what's going on. I don't live with my parents. Like, I've been in the real world for, decades, and experienced like actual markets, growing and crashing. And I know what's really happening. I'm not just like basing all my technical analysis off of, 2 years experience in the crypto markets. Like I have, decades of experience in, business, sales, marketing, all these things. So, and again, I'm sure there's people out there that have more experience than me. I'm just saying, like, I have actual, like, knowledge of these situations, and, like, am able to, like, reason and see ahead in, like, what's going to happen based on, like, human nature and psychology. So, and that's one of my strong points, in the same way that somebody else might be, like, whatever, good at basketball or chess or whatever it is. Like, I'm able to, like, basically anticipate like, people's movements based on, like, psychological and, like, mathematical targets. So but anyway, that's enough for today. Obviously you guys are familiar with me. If you're listening to this part of the video, you know that I do know what I'm talking about, and I have experience, and there's a good likelihood that what I'm expecting to happen one way or the other does happen. And it's not like it's going to happen overnight. And even if we are wrong about one little micro move inside of one of these spaces, we can expect that the overall macro will reveal itself clearly, and we'll be able to just ride the coattails of the whales, as we like to say. It's very easy to see these markets, like, flipping around. It doesn't happen immediately, and people like us that are here watching every day, often every hour, we don't, like, FOMO in and miss, like, the big moves. Those are the people that essentially, like, haven't been watching all day long, and then or all week long or whatever, and then flip on the TV and see Bitcoin's up like 32% or whatever the situation is. Like, we're here watching, we see the moves playing out, like, we get the triggers from the market, we've got the indicators, and that's what this is really all about, guys. I want you guys using these indicators and telling me, like, hey, look, I changed this setting over here, and it was giving me signals that are more accurate, or, like, hey, it'd be great if you could explain to me how this works, or whatever. I am working on the courses as we speak to help get everybody up to speed and get everybody on the same page. Those will be free, like I promised. At this point in time, especially with the way the economy is and everything, I even more want to be able to provide the community, with a bunch of, like, free and awesome and useful assets that you can use to, like, grow yourself and educate yourself as you have this additional time, and potentially turn this into a what was in the past, like, losing trades and investments into, like, winning. And I think you'll see over time that you will see your portfolio or your trades or your technical analysis improving and increasing substantially. So stick around, guys. We're doing it together. I appreciate all the growth lately. If you just take the time to comment, like, subscribe, share, all that garbage, I really appreciate it, guys. I do appreciate all the growth lately, and all the love lately in the comment sections. And everybody that's been randomly just sending a little crypto here and there, I do greatly appreciate it. It just helps to support the channel, and I don't feel as guilty about, like, dumping a bunch of extra time into the channel. That I should be doing, like, other productive things. But I do really enjoy this, and I enjoy, like, helping people and teaching them and helping them to learn and providing everything for free. And I understand that not everybody is in a position to donate or whatever, so that's completely fine, and I understand it, and that's why I don't charge you guys. I know everybody's in different positions, and I would rather see those that are financially thriving do well and be able to support the community when they are, and those that are struggling or on the back end able to still be a part of it without suffering, because they're often the ones that need the knowledge and need the TA and the community the most. So well, there you have it, guys. Enough of the philosophical stuff. We're gonna get back into it. We got our daily close coming up here in an hour, and I may do a late night video tonight as well. Crypto Trend Trader, and I'm out of here.